Good morning, traders. This is Joanne with Succeed in Forex. Welcome to our Forex news broadcast for Friday, March the 28th, 2008. The headlines out of Switzerland this morning read, Dollar extends gains on Fed Term Securities Lending Facility auction results. The dollar rose on Thursday on views that liquidity conditions for banks were not as dire as initially thought, after a tepid Federal Reserve auction to swap poor-performing investments. Analysts said the dollar also got a lift from investors covering short positions after a recent sell-off, and warned that underlying sentiment on the dollar remained bearish. Results from the Fed's $75 billion term lending facility showed primary dealers submitted just $86.1 billion of bids for the Fed's offering of low-risk U.S. government securities for 28 days. The TSLF is part of a liquidity campaign by the central bank to help the distressed financial sector, which has suffered more than $120 billion in write-downs tied to subprime mortgage investments. The details of the discount window borrowing for the week, which ended on Wednesday, showed primary dealers more than doubled their direct borrowing from the Fed. The euro-dollar was flat yesterday at 158.12, below last week's record highs of 159.04. The euro is still up more than 8% this quarter, remaining on track for its strongest quarterly performance since late 2004. The dollar-yen briefly rose above 100 shortly after the announcement of the TSLF auction results. It was last trading around 99.54. The dollar Swissy was flat at 99.23. Analysts are saying that investors are merely pausing before driving the euro to fresh all-time highs against the dollar, with the U.S. economic data continuing to point to further Federal Reserve interest rate cuts. They also said reports showing the U.S. economy grew in line with market expectations in the fourth quarter, while job claims declined last week, had minimal impact on the market. In its final estimate of the fourth quarter gross domestic product, the Commerce Department said economic growth slowed from the previous 3 months. Thursday's data also showed the number of U.S. workers filing new claims for jobless benefits fell by 9,000 last week, although a more reliable gauge of layoff trends rose to its highest in more than 2 years. The Federal Reserve has slashed the benchmark federal funds rate to 2.25% from 5.25% just over 6 months ago, while the European Central Bank has kept its refinancing rate at 4%. The dollar was steady in the Asian session as volumes were thin. The majors were range-bound for most of the morning, with a jolt of risk aversion as news of the latest missile test by North Korea hit the market. Yesterday, the U.S. data was broadly better than expected, giving the dollar a temporary reprieve from selling. However, we see this bullish sentiment to have a very short life. U.S. consumer consumption unexpectedly revised to 2.3% from 1.9%, while inflation indicators eased moderately. The markets are still uncertain about how much the U.S. economic conditions are already priced into the U.S. dollar. However, even if a large portion of weakness is already accounted for, we believe that when traders will actually see disturbing data which corresponds with a recession, such as a negative GDP or Wednesday's durable goods orders, the U.S. dollar will come under renewed pressure. With BOJ Governor Suda hinting to a possible rate hike yesterday, markets were particularly interesting in Japan. Inflation pressure was recorded across the board. The dollar-yen trended down to 99.31 before North Koreans' actions reversed the downward slide, and the market began to price in a lower probability of a rate cut in the next 12 months from 17 basis points to 14 basis points. New Zealand and Australia were both strong performers in the Asian session. New Zealand's GDP for the fourth quarter increased to the strongest quarterly growth since the third quarter of 2004. The RBNZ's Governor Bullard commented that inflation pressures in New Zealand remained relatively strong, and the current setting of 8.25% with a flat outlook remains appropriate. Both currencies are still highly coupled with the U.S. and Europe's growth and commodity prices. In the U.S., the market will be watching February's income and spending for signals on the health of the consumer and hints of the first quarter's GDP. Retail sales increased moderately, which suggests real consumers' report was stable, providing more support that the GDP contracted in the first quarter. That concludes our news for today, for this week, and for this month. We hope you are finding these broadcasts beneficial to your trading, and that you've had a wonderful trading month and made many, many pips. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you'll find information about our Traders Training Center and a link to our Yahoo forum, also called Succeed in Forex. Have a wonderful weekend and happy pipping.